Welcome back to XRP Spotlight, everyone. Hope you're having an amazing day wherever you're watching from. What a weekend it has been in the crypto market. XRP, Bitcoin, Ethereum, Solana, meme coins, just about everything took a serious hit, and now we're seeing a small recovery begin to emerge. But the big question on everyone's mind is simple. Has the worst already passed? Or is this just a temporary pause before another wave of volatility hits the market? That's exactly what we're going to break down today because there are some major developments unfolding this week that every XRP holder and crypto investor needs to keep an eye on. Before we dive into everything, all I ask is that you send out some positive energy today. Give me one of those beautiful smiles, hit that like button, and let's get into it. You guys already know my theory, the more likes on XRP videos, the more interesting things seem to happen around the market. I'm just saying. And trust me, there's a lot to discuss because what we're seeing right now is one of the most fascinating setups we've had in quite some time. At the moment, XRP has managed to recover slightly after experiencing a sharp decline during the recent sell-off. Bitcoin, Ethereum, Solana, and most of the crypto market experienced heavy pressure as investors rushed towards safety. Bitcoin briefly lost an important support level before bouncing back. Ethereum dropped hard before finding buyers, and Solana followed a very similar pattern. Across the board, there was significant liquidation activity, fear, uncertainty, and a lot of emotional decision-making taking place. Yet despite all of that, the market has shown signs of stabilization, at least for now. What makes this situation particularly interesting is the behavior of sentiment indicators. Normally, during a major pullback, you expect fear levels to fluctuate dramatically. But this time, something unusual happened. The fear metrics remained remarkably flat. Day after day, they barely moved. That's incredibly rare and suggests that while traders were certainly nervous, there may have been an underlying factor preventing complete panic from taking over the market. Whether that's anticipation surrounding upcoming regulatory developments or expectations for economic data, something appears to be keeping market participants cautiously engaged. One theory that continues gaining attention involves large-scale capital rotation. Many analysts have been discussing whether institutional investors are pulling money out of crypto and other risk assets in preparation for major investment opportunities elsewhere. When billions of dollars move through global markets, it can create temporary liquidity shortages in smaller sectors like cryptocurrency. We've seen this happen before. The crypto market is still relatively small compared to traditional financial markets, and when large investors reposition capital, the impact can be dramatic. But perhaps the biggest story right now isn't the price action itself. It's the disappearance of retail participation. According to recent market data, spot trading volume across centralized exchanges has collapsed compared to previous highs. Activity that once dominated the market has fallen sharply, and many casual investors who entered during periods of excitement appear to have stepped away entirely. That's why today's headline is so important. They have vanished. The crowds that rushed into crypto during the hype have largely disappeared. Now, before anyone watching takes that personally, I'm not talking about this community. If you're here watching XRP Spotlight, staying informed, researching developments, and thinking about the long term, you're already operating differently. You're not the type of participant who only shows up when prices are exploding upward. The people who have vanished are those who entered purely because everyone else was talking about crypto. They came for excitement, not conviction. And when markets became difficult, they disappeared. Historically, that's actually a very important signal. Markets often reach critical turning points when public interest completely dries up. During bull runs, everyone suddenly becomes an expert. Friends, family members, co-workers, everyone wants to talk about crypto. During downturns, the exact opposite happens. Silence takes over. Conversations disappear. Search trends decline. Trading activity falls. That's exactly what we're witnessing right now. The excitement has faded, and only the dedicated participants remain. What's fascinating is that while retail participation has collapsed, infrastructure development across the crypto industry continues moving forward. Projects are still building. Institutions are still exploring blockchain technology. Governments are still discussing regulation. Developers are still releasing updates. The headlines may be less exciting than they were during peak speculation, but beneath the surface, the industry continues evolving. That's an important distinction because market sentiment and technological progress don't always move together. Looking ahead, this week could become extremely important due to several economic events. Inflation data, employment figures, and broader macroeconomic indicators all have the potential to influence investor sentiment across financial markets. Crypto does not operate in isolation. When investors reassess expectations for interest rates, inflation, or economic growth, digital assets often react quickly. That's why so many traders are paying close attention to upcoming economic reports. At the same time, regulatory developments remain a major focus. Discussions surrounding crypto legislation continue generating significant attention because regulatory clarity could influence institutional participation for years to come. Investors are watching closely to see whether policymakers move closer toward establishing clearer frameworks for digital assets. While expectations remain high in some corners of the market, experienced investors understand that nothing is guaranteed until legislation actually becomes law. That's why it's important to remain balanced. Optimism is valuable, but so is preparation. Markets rarely move in straight lines. Even if positive developments occur, volatility can still create unexpected price swings. Likewise, setbacks don't necessarily invalidate long-term opportunities. Successful investors learn how to prepare for multiple outcomes rather than becoming emotionally attached to a single scenario. Flexibility often becomes one of the most valuable assets during uncertain periods. Another factor worth watching is market positioning. Liquidation data continues showing large clusters of leveraged positions sitting above and below current price levels. These areas often act like magnets, attracting volatility as traders battle for control. When large amounts of leverage accumulate in one direction, sudden moves can occur as positions are forced to close. We've seen this happen repeatedly throughout crypto history, and current market conditions suggest it remains a possibility moving forward. There are also analysts who argue that much of what we're seeing fits within historical crypto cycles. According to this perspective, periods of extreme pessimism frequently occur near major turning points. When confidence disappears, when activity dries up, and when participants begin questioning everything, markets often approach conditions associated with long-term bottoms. Of course, no indicator is perfect, and history never repeats exactly. But it's an observation many experienced market participants continue monitoring. One particularly interesting development involves oversold conditions across several major assets. Technical indicators on multiple cryptocurrencies have reached levels rarely seen in previous cycles. While that doesn't guarantee an immediate recovery, it does suggest that selling pressure has become unusually intense. Markets can remain oversold longer than many expect, but these conditions often attract attention from investors looking for value opportunities. The reality is that nobody knows with certainty where the absolute bottom is located. Could XRP experience additional downside? Absolutely. Could Bitcoin revisit lower levels? That's possible too. Could markets suddenly reverse and surprise everyone? That can happen as well. The key is recognizing that uncertainty is a normal part of investing. Anyone claiming complete certainty about what happens next is usually oversimplifying a very complex environment. As we move through the coming days, all eyes will remain on economic data, regulatory developments, institutional activity, and overall market sentiment. The disappearance of retail investors may feel discouraging on the surface, but historically, some of the most important opportunities have emerged precisely when public interest reached its lowest point. Whether we're near a bottom or simply experiencing another stage of the cycle remains to be seen. But one thing is clear. The crypto market is entering a critical period, and XRP investors should stay informed, stay prepared, and stay focused on the bigger picture. Thank you for watching XRP Spotlight. Let me know your thoughts in the comments below, and as always, let's make a lot of money.